This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on June 28th, 2013. Our time is 8:38 in the morning Mountain. Our radio show runs on your favorite radio stations. You can listen to the shows archived on Harold's websites, HESradio.com, also rarecoloreddiamonds.com. We have a podcast, too. We're podcasting on iTunes. Go to iTunes, type in World Financial Report on Radio. You can listen to our show. We are portable. We go anywhere you do through iTunes. You can listen to Harold's daily market commentary on his websites and through the podcast location as well. As we start today's show, happy Canada Day, long weekend. And for those in Calgary, we're thinking about you as you now start to dig out. Obviously, we're all horrified by the pictures and what happened in Calgary. It was just stunning to see what happened there. And now everyone is cleaning up, and our thoughts are with you. As we tape today's show, obviously it's been a very volatile week for hard assets, gold, silver, platinum, palladium. And there's a lot of people who don't quite understand what's happening. And that's why there's Worldwide Precious Metals. They're there to help you through these times when we have a lot of volatility. If you want to know and understand why the markets are doing what they're doing, give them a call. They're the experts in precious metals. Their website, www.pmc.com, telephone number 1-866-623-2002. We have a free weekly newsletter. We'll send it out via email free of charge. This is 1 week. You must read it. This is actually a must-listen-to radio show because we're going to be explaining why some of the things that are happening in the markets are happening. And Harold, there are different theories. We have the deflation theory that seems to have popped up here in the last week, that deflation is a threat and gold is the canary in the coal mine, that they're actually going to have to, the Fed, increase quantitative easing to fight off deflation. You also have the manipulation theory, which is very valid from sources like GATA and others, where governments, along with bullion banks, are driving down the price of gold to make the economy look much better than it is, because if gold was doing well, it would be a sign that things were not good in the economy, and they're trying to mask that. Now, the third side is things are getting better, according to some people, and Ben Bernanke came out and spoke and said that they're going to be tapering the quantitative easing. People are fearful right now that there will be no quantitative easing, interest rates are going to rise, and gold obviously is pulling back. Many people have said that most of the market has misinterpreted what Ben Bernanke said a couple of weeks ago. There's going to be quantitative easing continuing for quite some time. We know into 2014 for sure. And interest rates are going to stay low for quite some time. Even Fed governors have come out and said, in fact, with the last vote, one governor voted to increase quantitative easing. And there was a governor who came out here in the last week and said that it's going to be a long time before quantitative easing ends and low interest rates end. And when they talk about things getting better, 76% of Americans are living paycheck to paycheck. That's not a positive thing. In fact, one of the other stories that caught our attention this week, bond losses of $1 trillion could happen, according to the Bank of International Settlements, if yields spike up. And it's also going to increase the costs of governments around the world who have to pay interest on those rates. Harold, it's a very confusing time, and we are going to, in this hour, try and explain to people what's happening and why you still need to maintain an allocation of hard assets in your portfolio at all time.
You're 100% right, Randy. It is very confusing, very maddening at times, very confusing to say the least, because in all honesty, there's no way in the world that under a normal market condition that this would be happening, because low interest rates and weak dollars make gold and silver go higher. I mean, it's an action-reaction type of situation. So, again, what I'm actually thinking, and we've been saying this for quite a while, is that it's out of desperation. There's things that are happening in the markets because the governments are so desperate. You know, a couple months ago, the U.S. government was trying to get some gun laws passed. and they were trying to outlaw this AK-47 assault rifle, and it never even made it to the House. Nobody even would consider banning this rifle. So what does the government go out and do is they bought up all of the ammunition for the AK-47, and now there's none available. So the government can get things done in whichever way that they want to get things done, and it isn't always the most orthodox way to get it done. Again, looking at the markets the way that they sit, and I've traded these markets for 35 years, I'm scratching my head, and there's times that I'm angry over what I'm seeing because, again, it makes, number one, not only us, but everybody who's been in this business, who has traded the markets for the last 10 or 12 years, who has made their prognostications on the markets, done their research, and know basically what these markets should be doing, everybody's scratching their head and saying that this is literally impossible. So what we saw this week was a ridiculous market. We talked about very heavy support in gold at 1,250, which is production cost level. So basically, it should have been very difficult for gold to have broken through 1,250. But this week what happened is that the market was trading at about 1,280, and then I guess it traded in Asia overnight, and they put a lot of sell orders through, and when it opened up in New York, it went right through the 1,250 level and ended up trading immediately at 1,230. So the market dropped $50 at the opening and went right through all of the stops and everything that were in the market. So this will give you an indication as to how they play games in this market, and how, because gold and silver are not, heavily traded, they're not the biggest markets in the world, so basically they're a little bit more easy to manipulate, and that's basically the way we see it. Gold was down $10 at the opening this morning, below the $1,200 level. It hit $11.95. We're now back up to $12.17. We're up $16 right now in gold. Again, I think that this market is definitely going to rally again. There's no doubt in my mind that before this whole thing is over, we're going to see prices in gold and silver that were higher than the prices that we saw in 2011, which was $1,900 in gold and $50 in silver. But I think what we're going to start to see is a market that doesn't trade on a normal basis. We're going to wake up one morning and find out that gold's up $200-$300. We're going to wake up one morning and find silver up, $3, $4, $5, because they can't continue to do what they're doing in a market and expect that the market's not going to come back and react to the trend. And the trend is always your friend. So basically, they can force down this market just like they did in oil back in 2011 when they forced oil from $170 all the way back down to $50. Now oil's back up to $100. If you do watch the price of oil, and I trade oil heavily, you'll notice that every time oil gets within $1 of $100, they sell it off again. We're trading right now at $97.30 in crude. There's no doubt in my mind that we're going to hit $120, $130, $150 in crude oil, and there's absolutely no doubt in my mind that we are going to see much higher prices in gold, probably well over $2,000 and well over $100 in silver. The thing that really bothers me at this point is that people that are in the market see what's happening, they panic, and then they sell, and then they're out of this market with no opportunity to make their money back, number one. And number two, do what gold and silver are supposed to do, which is hedge you against the horrible economy. And that's basically what it is. I'm a Canadian living in the United States, and there's absolutely no way that the U.S. economy is getting better. It doesn't warrant a 15,000 Dow. If they weren't putting $85 billion a month into the bond and stock markets, we'd be looking at 6,000 in the Dow right now. So again, a lot of the things that are happening are just scratch-your-head confusing type of scenarios. And again, I do not believe that the gold market is going to continue to fall. I think that they may force it down. I think that, I analyze this market fairly closely. You look at the commitment of traders reports that come out, and the banks that were shorting the gold market before are no longer shorting it. In fact, the commercials are buying gold and silver heavily. So why in the world would gold and silver not be going up in the futures markets when the commercials are buying it and and all the shorts are out of the market? So the drop that came this week, when the market dropped from 1280 down to 1230 and went right through the 1250 level, was an unbelievable move. And again, that is not normal in these markets. And it tells me that some traders were able to fix the market by trading it in the Orient, where the market trades very thinly, and then have certain orders placed in the market that when New York opens, there's a gap. I know this sounds confusing, but the market gaps open or gaps lower, and next thing you know, we're below the 1250 level, and we're now trading at about 1230. And then the market continued to go lower from there because you broke a very heavy support level. Then the market dropped below $12 to $11.95, and then you found some fresh buyers this morning. We're up $16.80 in gold right now, but it was down as much as $10 at one point. Silver's up almost $1 today, and that's another scenario. Silver is not only a monetary metal. Silver is a very strong industrial metal that is used in almost everything that we do in life, medical and computers and photography and almost everything that we do. They're finding more usage for silver. How in the world does silver drop as much as it did when it's such an important industrial metal? On top of the fact that by keeping interest rates as low as they have, there's just no way in the world that we're not going to have inflation. It's an automatic scenario. So what they can do is they can suppress the market for a certain period of time, and that's what they're doing successfully. What they're also doing is scaring people out of the market, because people are saying, well, maybe all the prognosticators for gold are wrong, and we're in the wrong trade, and we're going to get out and, preserve our losses type of thing. But I think that's the worst thing that we could do at this point, because, again, the moves in the market are not realistic moves for gold and silver. I've traded these markets since 1978, 79, 80. I've studied these markets and have made an awful lot of money trading gold and silver and oil. And, again, I'm telling you that what's happening in the market right now is totally unorthodox, and gold does not normally trade in this fashion. So again, if you own physical gold and silver, I would not sell that gold and silver. I would definitely hold it. In fact, I would look to pick up more gold and silver at these levels because, again, who would have ever thought that we'd be able to buy silver below the $20 level again? So all in all, we also saw a great indication this week as to what happens when they talk about ending quantitative easing. Gold dropped 550 points in 2 days. In actual fact, they don't say anything on Wall Street that the Dow has dropped 1,000 points from its high. They don't say anything about that. All they were concerned about was obviously Bernanke's comments. The market dropped 350 points in one day and again dropped again the next day. So you're looking at the market is down another 80, 90 points this morning, and the Dow could definitely drop below 6,000. So again, at this particular point, Randy, I'm still a very, very strong believer in the gold and silver market, in the diamond market, in the hard asset markets, and this is not out of any type of desperation. This is primarily because these are the markets that you need to be in if we're going to be able to, number one, protect ourselves against the onslaught of what's coming, which is definitely inflation, and number two, again, I think we're going to make a fortune in the gold and silver market. We ran it up from $250 all the way up to $1,900 in gold, and then they sold it off purposely. They raised the marginal requirements so heavily that they forced down the price of gold and silver. And now that gold and silver are back at least to a point to where the cost of trading gold and silver in futures is reasonable again, I do believe you're going to get these hedge funds coming back into the market again. So again, if you own physical gold and silver, do not get out of this market. This market, in my opinion, and many others, is going to go substantially higher, and you cannot suppress a market like this. It's like a spring. You may be able to hold it down for a while, but eventually it's going to recoil, and it's going to come back twice as strong. So, again, I'm still very firm that we are going to see new highs in gold and silver moving forward.
Thing to keep in mind, too, a lot of people are equating what's been happening here in the last little while to 2008. We saw a big pullback. Gold went from $1,000 to $700, and from there it went from $700 all the way to $19. We have been doing the show for a long time. Harold has been doing it since after 9/11 in 2001. I joined him in February of 2002. And we've been through a lot of ups and downs in this market. Ultimately, the trend has been up. But that's why we come to you with a lot of knowledge. And when we're talking to you, we've been through all the ups and downs in this market, and so is Worldwide Precious Metals. That's a company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. And if you're just sitting back and you're scratching your head saying, well, why should I have an allocation? of hard assets in my portfolio. Speak with Worldwide. They're the experts in this very specialized market, and really, to have a proper portfolio balance, you always should have at least 5 to 10% in your portfolio of hard assets as an insurance policy. We have said that for years and years and years. You need that insurance policy in your portfolio. Speak with Worldwide. www.pmc.com, their website, telephone number 1-800. The number actually is 1-866-623-2002. 1-866-623-2002, their website, www.pmc.com. And this week, please get our free weekly newsletter. Get your name on the list. We'll send it out to you free of charge. It does not take long to read. You can go through it in 5 to 10 minutes or spend hours if you want. But if you want to really understand what's happening in the markets right now, we have a lot of people with some great thoughts, and we'll be happy to share those with you. Once again, to connect with Worldwide Precious Metals, www.pmc.com, 1-866-623-2002. It's Canada Day long weekend. We should mention our radio show runs in Edmonton, and we will be on early next week. Our show running on Sunday at 12:30 to 1:30 next week, so please keep that in mind. Some of the information in our newsletter. Stephen Lieb, a big advocate for having hard assets, says, "This is not the time to lose faith in gold. You can lose faith in government, stocks, bonds, but do not lose faith in gold. The world is changing, and it's definitely heading for a gold standard. I think the kind of volatility you're seeing now suggests that it will happen sooner rather than later. Probably within the next 2 to 3 years, we will see a gold standard. So I think we will still see gold and silver prices 10 to 15 times higher than they are today. Right now, people are going through so much pain, but this is the exact time to seek a safe harbor by owning physical gold and physical silver." Also, Egon von Greyer is coming out and saying just a hint of ending QE led to a massive stock and bond market fall worldwide. The bottom line is, if the Fed stops printing, the world financial system will collapse. I would also add that the average worker in the United States, if you just adjusted properly for inflation, that his and her weekly wage has been cut in half since 1973. That's a staggering 50% loss of purchasing power over 4 decades. Also, the food stamp usage is up to 50 million, and real unemployment is at 23% in the United States. You can get this information from Worldwide Precious Metals. Get our free weekly newsletter. Connect with them. www.pmc.com, 1-866-623-2002. Harold, it's not about optimism or pessimism. It's about realism, and that's what this radio show has always been about, being realistic, and we think we are. We do a lot of research, and we encourage people to look it over and have a realistic look at where we're heading financially in the world, and protect yourself by having hard assets.
You're 100% right, Randy. Again, all we want is for our listeners to do well. Again, that's the reason for the show. That's why we've done this for, going on 13 years now, and we only care about our listeners to the show and want to make sure that they do well. At times, it's extremely difficult, to explain what's going on in these markets, because this really is unprecedented. I mean, the times are so desperate that things are happening, and they're just doing it without any recourse whatsoever. I mean, how do you find out who's really shorting this market? Because they don't really tell you in these commitment of traders report which banks are short the market type of thing. And to me, the biggest head scratcher of all is, where are the regulators? How in the world can the Commodity Futures Trading Commission, which is the federal government that monitors these markets, they're supposed to be the police of this market, how in the world do they sit back and say, oh, this is normal? This is how that market is supposed to trade. Again, I've traded the markets for over 35 years. The markets do not trade like this. So, again, I think that once all the dust settles, and once people realize again how severe the financial situation is worldwide, they will get back into the market. I do believe that the speculators and the hedge funds and whoever has been shorting the market are doing this along the, also to get people out of the market. so they can buy it back at a very low price and make a fortune in the market. And that's the way I see the way the market is being traded at this point, Randy. So, again, I have not sold my gold and silver. I own it physically. I'll hold on to it because it's the right thing to do at this point. And I can assure you, with 50 million people in the U.S. on food stamps and 75% of the population living paycheck to paycheck, there is no way in the world that the economy is getting better in the U.S. And the only way that they're showing that it's getting better is by playing with the numbers with stocks and the overall economy. But it is not when 75% of the people are living paycheck to paycheck. What that basically means is that the general public and the middle class, who is the backbone of the entire U.S. economy, is not going to be able to spend any money because they don't have any. And if home prices don't start to increase substantially, again, things cannot get better in the U.S. So, again, I'm just sitting back and letting the markets do its thing. I'm not heavily leveraged in the market, so, again, that's not going to force me out of the market. All we want to do is let the market come back and do what it's supposed to do. And as long as interest rates are low and currencies are being devalued, gold has got to go higher. There is no doubt about it.
One thing to keep in mind, too, we have run into a situation now where gold has gone down to a point where it's the marginal cost of production of gold, the 90 percentile in 2013, was estimated at $1,300. And that's when companies go out to mine. Their costs, they need at least $1,300. That's the production cost to break even. So that means that basically a lot of companies are just going to shut down, and we have seen that. Companies deciding just to shutter down because they cannot make any money in this market. As a result, that means no new gold going into the market. So keep that in mind. A very important point, and you can read it in our newsletter. Gold drops below its average cash cost. As a result, we're going to see a lot less gold and gold companies putting precious metals into the system, and that will be a positive as well. One story that I think is very important, there's a chart along with it. City analyst Tom Fitzpatrick, he actually said that in the past that gold could go to $1,200. We've had that in our newsletter. And he actually now believes that this has been a healthy correction. And he thinks it's similar to 2008. And he personally believes over the next 3 years, due to this correction, we could see a move that takes us, if it's similar to 2008, all the way up to $3,400 to $3,500 gold. You can read that story in our newsletter as well. One story that I think you must read in our newsletter, it's from Keith Barron. He was interviewed by King World News, Eric King. Criminal paper derivative selling used to crush gold market. And he's phoned around, spoken to key contacts around the world, and he believes this has all been done in the paper market, and he explains all the reasons why they are doing this. Get in contact with Worldwide Precious Metals. Get that story. Read it over. 1-866-623-2002. WWPMC.com is their website. One thing to keep in mind, as Robert Fitzwilson said, for gold and silver, another smash was engineered. It was fascinating to learn from Andrew Maguire that there was zero physical metal for sale as the smash was occurring. What kind of market can show a severe price decline when the asset upon which the market is based doesn't even change hands? We'll come back, talk about diamonds. As the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on June 28th, 2013. Happy Canada Day, long weekend. Happy birthday, Canada. Proud Canadians, Harold and I. And to those in Calgary, we are still thinking of you. Obviously, we saw all those horrific pictures about what was happening in southern Alberta. And now everyone is cleaning up and trying to get their lives back on track, and we have not forgotten about you. Here in Edmonton, where we tape our show, Chorus Edmonton is on their way as we speak on Friday with a truckload of goods, and hopefully they will help you out. And obviously we're proud Canadians and proud Albertans. We're Alberta strong, and we're proud Albertans. We are standing with each other in this very, very difficult time on the Canada Day long weekend. Worldwide Precious Metals. That's the company Harold recommends you use when it comes to investing in precious metals. They're the experts in this very specialized market. If you're trying to understand why the market is doing what it's doing, being so volatile, speak with them. Call them, 1-866-623-2002, the website wwpmc.com. They will explain to you why you always should have an allocation, that insurance policy in your portfolio of precious metals. The radio show is a must listen to this week. The newsletter is a must read, because if you want to understand what's going on, it's all explained in the newsletter. Get our free weekly newsletter. We'll send it out to you free of charge via email. Connect with Worldwide, wwpmc.com, 1-866-623-2002. Harold's website for diamonds is rarecoloreddiamonds.com. Rarecoloreddiamonds.com. We have our featured diamond of the week. This week it's a 1-carat emerald cut fancy intense pink argyle, and the pink argyle is absolutely stunning. And it was interesting this week that Rio Tinto decided to keep the argyle mine. They were trying to either sell it to another party or they were going to do an IPO, and they decided that they are actually going to keep the argyle mine. The argyle mine in Western Australia puts out 90% of the world's pink diamonds, 90 to 95%. That mine is up here in the next roughly 5, 6, 7 years. And as a result, very soon, Harold, the world will have no new supply of pink diamonds. And one of the reasons that Rio Tinto wanted to get out of the business, it was not that they didn't like diamonds or the diamond business. It's very, very difficult. You have to go in, you have to do all the work in regard to upgrading the mine and actually do the mining. It is a very, very tough business. And that's why when this mine shuts down and the pink diamonds that are out there are the only diamonds in the world, Harold, no new diamonds coming out, we're just very excited to see where the prices go in the future.
You bet, Randy. Again, and it's my goal that all of the listeners to our show and all of our clients and friends will own these diamonds. Because dollar per dollar, I don't see a better investment than owning, diamonds at this point, certain diamonds. And the Argyle pinks just have tremendous profit potential. It's like anything else. It's a very important commodity. The demand for these diamonds is very strong at this time, and it's going to get stronger and stronger the closer the mine is to closing, and it's coming very close. It's going to be in the next 5 or 6 years. So, again, to own an Argyle pink diamond is to own something that most people in their life will never, ever get a chance to see, and they're extremely valuable. They go up tremendously in value. 5 years ago, clients of ours bought vivid pink argyles for $50,000. Now those same diamonds, 5 years later, are $250,000 diamonds. These diamonds do nothing but go up in value. They never decline because there's so few of them. There's only about 200 carats a year of these magnificent pink diamonds. And once the mine closes down, there won't be any more of them. So again, it's my goal that my clients will own these diamonds and make the money that these diamonds are going to return. We anticipate that the price of these diamonds can increase 8 to 10 times what today's prices are when the mine closes down, which again is only about 5 or 6 years from now. So again, to own an Argyle pink, not everybody can do it. It's not for everybody. They're not inexpensive. They start at about $25,000 and go up from there. To get a diamond, an Argyle pink diamond, for about $100,000, we anticipate in the next 7 or 8 or 10 years that diamond's going to be worth somewhere close to 8 to 10 times that amount. Anytime you can invest $100,000 and get back 5, 6, 7, 800,000 on it is a tremendous return, and that's what we anticipate seeing in these Argyle pink diamonds. In fact, it's the vivid pink argyles, which are the best color, the most expensive of the Argyle pinks, that are doubling in 2 years now. So just think about it. You put your money in the bank, you get 1 or 2% return, interest. There's risk keeping your money in the bank. We all know that as a result of Cyprus. And then on top of that, there's inflation. So there's more inflation than there is the return on the money in your bank. So if you're putting money into a bank account and you're getting 1 or 2% return, but you put money into an Argyle pink diamond and they increase by 20 or 25% a year, that's almost a no-brainer. I mean, the fact is that it's not a short-term investment. You don't want to buy the diamond today and sell it a year from now. You won't make a lot of money with it. If you want to make a large return, if you want to put money away for retirement, these are the type of assets that you want to put them into. Because to hold a diamond for 10 years, certain diamonds will give you tremendous returns. For example, yellow flawless diamonds. They increase by about 15 to 20% a year. That means that if you invest in yellow flawless diamonds, which we carry, we invest very heavily in those diamonds. Well, those diamonds, if you bought a $20,000 yellow flawless diamond, put it away for 10 years, that diamond would be worth about $80,000. If you put $20,000 into the stock market, into your retirement savings plan, I can pretty well guarantee you it's not going to return you $80,000 on $20,000 invested. So again, most people didn't even know that diamonds existed as investments until we wrote a report 10 years ago called Rare Colored Diamonds, the Best Kept Secret. You know, I'm in Colorado now. I'm a Canadian living in Florida most of the time, but during the summer I operate my business and live in Colorado. And when I flew up here just the other day, I was with some people that are in the yacht business, and their business is similar. People are putting their money into assets they can enjoy and hold, and diamonds are one of those assets. Antique cars, vintage cars go up tremendously during these difficult times. So again, people are really going more towards the hard asset market as opposed to putting their money into the paper asset market, which is extremely risky and frustrating. So we recommend yellow flawless diamonds. Again, they start at about $15,000. They increase by about 15 to 20% a year. All of our yellow diamonds are flawless, and they return much more than putting your money into the stock market or putting your money into the bank. Again, if you want to retire comfortably, put some money into a rare colored diamond. Now, the other thing about diamonds is that how do you ever sell them? And realizing that I've been in the commodity business for 35 years, when I looked at the diamond business as an investment, one thing was missing, a way to resell them. How in the world can a diamond or anything else be considered an investment if you can't resell it? So we went out to build the secondary market to resell diamonds, and our business has been extremely successful. It's called H. Siegel Fine Auctions, and we built the only secondary market to resell diamonds. We've had over 10 auctions. Our last auction, we sold 17 pink diamonds in 1 hour worldwide. Clients all over the world buying our diamonds. So we built this auction site for our clients to resell their diamonds down the road, and it's called H. Siegel Fine Auctions. Our next auction is going to be October the 21st, and it's going to be another sensational auction. So again, with everything happening around the world, you got to realize that at this point things are not getting better, they're getting worse, and governments are getting desperate. What's happening in Japan is unprecedented. They're destroying their currency in order to try to bring on inflation, in order to try to restart their economy. It's not working. Their stock market is plummeting. On top of that, Europe is still in tremendous disarray. Nothing good is happening in Greece, Spain, Italy, Portugal, any of those countries. Their unemployment is at record numbers. In Greece and in Spain, the college kids, over 60% are unemployed. Those are depression-type numbers. Over 25% of the people in those areas, the adults, are also unemployed. In actual fact, if you look at the United States, our figures are not that much better. Kids coming out of college are not getting jobs. I would estimate that 30-40%, maybe higher, are not getting jobs coming out of college and can't even pay off their college loans. And then you look at the true unemployment numbers in the United States, not what they feed us every week, that it's at 7.2% or 6 point. Those numbers are totally false. There's about a 20 to a 23% unemployment rate in the United States. And people that were making money back in 2007, 2008, the mortgage brokers and stockbrokers that are making $500,000 a year, those people are now making $50,000 a year. That's why there's no way that the economy is getting any better in the United States. If people aren't making more money, then they're not paying enough taxes, and the government runs on tax dollars. And that's just not happening in the United States and in Europe. And by the way, wait and you see what's happening with China. If you think the United States is going through bad times, wait and see what's going to happen with China. It's all starting to come to the forefront now, and it's going to affect the markets in a gigantic way. So again, these are all reasons that you don't want to have your money sitting in paper stocks, paper dollars, and those type of assets. They can be manipulated, and you just can't make any money with them. They're way too volatile, whereas if you look at the diamond market never falls in price. There's articles being written about diamonds at this point that are touting diamonds as one of the best investments you could ever make. In actual fact, on the weekend of July the 18th, I was invited up to New York with my wife to do a live television interview with Bloomberg. That's how interested they are in diamonds. So they have us coming up to do a live TV interview and doing a 2 to 3 page article in Bloomberg magazine about my companies, H. Siegel Fine Auctions and RareColoredDiamonds.com. So the diamond market is now a worldwide market. Everybody with money is talking about it. Now, you don't have to be a multimillionaire to invest in diamonds. We're not talking about diamonds, that are in the 10, 20, $30 million range, even though I do have those. Most of my clients that invest in diamonds invest under $100,000. There's nothing wrong with getting started and buying a yellow flawless diamond for $15,000 or $20,000 and putting it away for your future. In fact, those are the type of diamonds that I put away for my grandchildren over the last several years, and I feel very comfortable when they're ready to get their start in this world that they're going to have an asset that we can sell for them that will get them started in this world. We had a diamond that we bought back in 2003. It was a 2-carat vivid pink argyle tender diamond. I paid $350,000 for the diamond in 2003, and now the diamond is worth $3.5 million. I mentioned this story before. We were out for dinner with my wife's girlfriend. She got a ring from her grandmother, a 5-carat pink. Her grandmother bought it 50 years ago for $50,000. Now the diamond's worth $3.5 million. This happens all the time in the diamond market. We have countless examples of clients of ours that have bought diamonds again in the 50, 60, 70,000 range that have made 3, 4, 500% return on their money over the last 5 years. So you tell me any other investment that can give you that type of return with the safety that you have in the rare colored diamond market. On top of the fact, these are the most beautiful assets you have ever seen, and again, something that will give you the type of income you need to retire one day comfortably. We all work very, very hard, and as Canadians, we're probably the hardest worker, and we put away money for our future. The fact is that it's very, very difficult to make money today. You can't rely on stocks. Real estate is iffy at best, and again, there's very few assets you can depend on. You need to diversify. You need to take most of your risk out of the markets to be successful trading. But again, to own a yellow flawless, an argyle pink, or a D flawless white diamond, that's where you're going to get your wealth from. That's where most people that have traded diamonds over the years have made most of their money. Just look at Lawrence Graff. He became a billionaire because of diamonds. So I recommend these very, very highly. I recommend them to my children, to my grandchildren, to my friends and family. And again, I consider everybody that listens to our radio shows and our clients family. We've been doing this for 12, 13 years now, and we're all in this together. D flawless white diamonds, they go up by 15% a year, and they are extremely, extremely difficult diamonds to get. In fact, Randy will let you know that every time an auction comes up, these diamonds tend to sell for 2 to 3 times what the experts are predicting they would sell for. To own a D flawless white diamond is to own something that is beyond rare, and again, they go up by at least 15% a year. So why would you not want to own a diamond like this that you can put away for safety, that does nothing but go up in value, that we could sell down the road for you and help you with retirement or getting where you need to go financially? So again, Randy, I've never been more excited about the diamond market. And by the way, if you look at our website, RareColoredDiamonds.com, RareColoredDiamonds.com, go to the loose diamond section, look at our pink and yellow and D flawless white diamonds, then look at the featured diamond this week. It's one of the rarest diamonds you'll ever see, and just by looking at the video of it, you'll know how special that diamond is. That's a diamond that's going to make somebody a fortune in money.
This week's featured diamond, 1-carat emerald cut fancy intense pink argyle. Very rare that you get a 1-carat argyle. This argyle is stunning. Connect with Harold at RareColoredDiamonds.com. Featured diamond of the week. Click on that link when you get to RareColoredDiamonds.com. You can also get our free weekly newsletter from Harold. Harold will be happy to send it out to you free of charge. If you'd like to speak personally and privately with Harold about diamonds, call 1-800-432-1022, 1-800-432-1022, or go to rarecolorediamonds.com. Harold has always been very generous with his time. He's happy to talk to anyone about the diamond market and their personal financial situation. One of the real cool stories this week that came out, you may remember there was a world record 75-carat briolette diamond that was sold. It has been named the Star of China. The new owner of what Christie's auction house called the largest and most perfect briolette diamond ever sold at auction has identified herself and picked a name for the 75-carat gem. Tiffany Chen, vice chairman of China Star Entertainment, has revealed herself to be the owner of the diamond. She named the diamond after her company, the Star of China. She purchased the diamond May 28 at Christie's Hong Kong Magnificent Jewel Sale for $11.15 million, $148,000 per carat, a world record for a diamond sold at auction, a briolette. The briolette has been graded by the GIA as to be of D color. These are the diamonds that Harold has been speaking about, D color flawless and type 2A, indicating its internally flawless clarity, excellent polish, highest level of chemical purity, and exceptional optical transparency. Less than 1 carat in every 100,000 carats of diamonds is found to be in this perfect condition. And Harold, this is the beautiful thing about diamonds. Yes, it is an investment, but you can name your diamond. You can wear your diamond. You can show it off. You can pass it down from generation to generation. And someday, maybe they will need that money and they'll put it up for auction. But here's hoping that it will be passed on for many generations for everyone's enjoyment. But you can't do that with a stock certificate or a bond certificate. You have something with diamonds that is an intangible you just don't have with anything else, and that's the thing that gets me so excited about diamonds. Here this lady named the diamond the Star of China, and she is so proud of it. In fact, we even have a picture of the diamond and her in our free weekly newsletter you can get from Harold. It is absolutely stunning, this diamond, and now, more than likely, it'll be passed down from generation to generation in her family. And maybe hundreds of years from now, we'll hear a story about it going up for auction and how it was originally purchased by Tiffany Chen. But that's the beauty of this market, Harold.
It is, and it's just got so many other benefits. But the most important thing is that it's very difficult to make any money today without taking gigantic risks. And in the diamond business, that's not the case. Again, we're very proud of what we've built, not only rarecolorediamonds.com and the way that we display our diamonds, and we're always adding new diamonds. In fact, I'm a very, very heavy investor in diamonds, especially D flawless whites, argyle pinks, and the yellow flawlesses. You'll notice on our website that we own more diamonds than anybody else in the industry, and that's because I put my money where my mouth is. We spent $40 million over the last couple of years with argyle just to buy their production, and what you're going to see over the next week or so is, by looking at our vivid pink section, that doesn't exist for any other company. Nobody has vivid pink argyle diamonds. They're the hardest diamonds in the world to get. But again, we believe in them so much that I've invested my own money in them very heavily, and I have no problem sleeping at night. These are the best investment diamonds that you can possibly buy. Again, we have diamonds starting at $15,000. We have diamonds that are D flawless whites that are over 100 carats that are in the $35 million range. Most of our clients do not buy those type of diamonds. Most of our clients are hardworking Canadians, like all of us, that just want to do the right thing. They want to put some money into an investment that's safe, that's going to grow, that's going to give us a greater quality of life, or our kids a greater quality of life down the road. So, again, we bring you these amazing markets, and we created the secondary market for you to be able to resell, and we're very, very proud of that. Again, our next auction is coming up on October the 21st, and we'll keep you advised as to what's happening there. But, Randy, the diamond market is on fire. Flawless whites, argyle pinks, and yellow flawlesses are all increasing in value.
And we can show you that. Obviously, we're here now into the last 5 months of the year, and during the past past 6-7 months, we've had a lot of auction activity between Christie's, Sotheby's, and different sources. And we'll be happy to send out those auction results to you, and you can see for yourself that we have pink diamonds and blue diamonds and red diamonds, yellow diamonds going for record prices. We also have those D flawlesses. They have really caught fire. Harold brought them to our attention, and I had not really heard a lot about them, but Harold, he was once again ahead of the curve, because once we started talking about them on the show, then we started to see them show up in auctions, and we started to hear more and more about them. And here a couple of weeks ago, and Harold can send these articles out to you, the Financial Times of London did two articles, one on yellow diamonds and one on diamonds in general and how well they have been selling at auction. If you would like to receive those articles, we'll be happy to send them out to you free of charge. But this is the Financial Times of London writing articles about diamonds, and one of the reasons is the privacy aspect. That's why people love this investment. The privacy part of it. People don't know you have it if you don't want them to. Portability. You can take it anywhere you want. Estate planning. Something you can pass on. Price stability. Diamonds have been very, very stable in a very chaotic world when we're seeing stock markets and bond markets and real estate markets plunging up and down. Also, great long-term growth prospects, and we've talked about it before. We've had a special report from Bain & Company. I think we had another report from Bank of Montreal we can send out to you in PDF file format, where they are very bullish on diamonds as a result of what's happening over in India and China. The Chinese, they covet, obviously, hard assets, and they are now starting to move towards investing in diamonds, as we just talked about this lady, the Star of China. So you can see this is a movement that is starting to take place around the world. It's obviously a market here in North America that it's strong, but it's increasing overseas. And over time, it's going to increase more and more. But the problem is the mine is not there. The mines are not there to produce the diamonds. As a result, the diamond supply is low, the demand is high. And Harold, at some point, as you know, you've been doing this a long time, prices will go up as a result.
No doubt about it. Absolutely no doubt about it. And we anticipate that the biggest moves will come with the Argyle mines, and the simple reason for that is that there's just not going to be any more of them. So anytime you take something as popular as Argyle pink diamonds and then they're going to be off the market, you're going to see a mad frenzy of investors going in and buying huge lots of these, or whatever is available. There's no huge lots available, buying 5 or 10 diamonds at a time just to be able to get these. We want our clients to be able to buy them while the prices are still, somewhat reasonable. If you can afford the vivid yellow, the vivid pink Argyles, they go up the most. They can double in 2 years, and the closer we get to the mine closing down, they'll start to double every year. Anytime you buy the very best, you always get the most back for it. Also look at our vivid yellow flawless diamonds. They're absolutely spectacular, and they are going up tremendously in value. It wasn't that long ago that you could have bought a vivid yellow flawless diamond in the 40 to 50,000 range. Now they're 75 to 80,000 and up. In fact, some of the bigger ones, like our 6.5 carat, they go for 250,000 a carat. So that's how much those diamonds are going up in value. And a lot of my clients own those type of diamonds. So again, I'm very proud of this. I only want for our listeners and our clients to do well. And again, we believe that the diamond market is one area that's going to give our clients great returns. And we also still believe very, very strongly, and we have never given up on this market, is that the gold and silver market is also going to do very well for our clients also.
Harold, happy Canada Day, and we're thinking of everyone in Calgary as they start that long process of digging out and getting their lives back on track. It won't be easy, but we're proud Albertans, proud Canadians. On a Canada Day long weekend, we're there for you, Calgary, and we're thinking of you during these tough times.
You better believe it, Randy. I've been through it myself. We've had Hurricane Wilma, so I know exactly what, our friends in Calgary are going through. And again, just be strong, get the job done, and I know you'll do it. And again, our heart goes out to everybody who suffered through that.
Thank you, Harold.
My pleasure. I wish everybody a wonderful long weekend. You certainly deserve it, and have a very profitable day.
Speak with Harold about the featured diamond, 1 carat emerald cut, fancy intense pink argyle. Connect with him, rarecolorediamonds.com, 1-800-432-1022. And if you're wondering about the hard asset market, gold, silver, platinum, palladium, wondering about this market, the experts worldwide, precious metals, connect with them, 1-866-623-2002. They'll explain all the ins and outs as to why you need an allocation of precious metals in your portfolio at all times. Happy Canada Day. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.